Step aside Russian sanctions, back away traceability, take a number lab-grown diamonds. We have a new front-runner for the diamond story of the year. De Beers is up for sale. It doesn't get much bigger than this. That's right, Anglo American confirmed it plans to divest or demerge from its 85% stake in the diamond company. Now, it wasn't a bombshell announcement. There's been some speculation about it, at least since BHP Billiton made its initial offer to buy out Anglo American in late April. And even before then, when Anglo wrote down its book value of De Beers by some $1.6 billion back in February in its annual results announcement, the rumor mill started to turn. This confirmation comes as BHP resubmitted its offer to acquire Anglo with largely the same terms on the table. Anglo rejected the deal again, but this time gave an outline of its strategy to unlock value. And that included the line about De Beers, which means the strategy evidently excludes De Beers. So what's at stake? What are the options for De Beers and why is it important? It's important because De Beers is not just another diamond company. It's not just another diamond mining company. It is the single most influential company in the diamond industry, still today. It's not the biggest producer of diamonds when measuring the volume of carats it pulls out of the ground. That honor, so to speak, belongs to the Russian miner Alrosa, but De Beers is the largest by value. And its reach extends beyond mining. It is also involved in jewelry retail, mining technology, grading, diamond equipment developments, traceability solutions. It has a lab-grown diamond brand, and Element 6, which produces synthetics and super materials for industrial use. That's the business side of things. Beyond all of that, De Beers has its way of reading the diamond market, and the industry still takes its cues from De Beers in that sense. That includes its pricing decisions, its public relations strategy, its approach to lab-grown diamonds, sustainability, environmental issues, the power of its lobby, and we're seeing that play out in the Russian sanctions saga this year. The beneficiation program, its partnership with government, most notably Botswana, all of these factors that De Beers is involved in shape the diamond market. But let's talk about Botswana for a second, because Botswana could be the kingmaker in this deal. The government is the 15% minority shareholder in De Beers, and one has to give Anglo credit where it is due, because its partnership with the government has enabled De Beers to empower Botswana within the diamond industry. And any new owner will need to do the same, and even more so given the new marketing deal that the government and De Beers have agreed to recently and are now in the process of finalizing. It's so complex, it's a web of many factors that De Beers is involved in. That's what makes the story so juicy. I'm obsessed, I love it. So given all of that, why is De Beers up for sale? It's the most influential company in the diamond world. The level of its production, it has incredible brand equity. So why is Anglo divesting? The short answer is that De Beers had a very tough year in 2023, with revenue down 36% to $4.3 billion and an underlying loss of $314 million compared to a profit of over $500 million the previous year. But it's deeper than that. You don't sell off a company based on 1 year's performance. The truth is that De Beers hasn't shown sufficient consistent growth in the past decade or even 2 decades. It had peak years in 2011 and 2014 when revenue exceeded $7 billion and earnings were above $900 million, but it has struggled to match those benchmarks. It has had volatile earnings in the last 15 to 20 years. And that has been the story of the diamond market, with pockets of progress but really struggling to demonstrate consistent growth. So that's the challenge for any potential investor over here. How do they leverage De Beers' position, its operations, its name, etc., to create value for shareholders and for the diamond industry at large? And yes, there is an aspect of creating value for the diamond industry for the benefit of De Beers' shareholders. That taps into De Beers' legacy of being the custodian of the diamond industry. But it's also just a natural consequence of its position in the market. Now, De Beers is presenting a new strategy at the JCK show at the end of May. CEO Al Cook is now in the job for just over a year, and this will be the first demonstration of his vision for the company. It'll be a really important presentation for many reasons, but in the context of the Anglo announcement, it takes on even greater significance. Cook's job now, if it wasn't before, is to shore up the value of De Beers. And so let's call this presentation the launch of the De Beers Roadshow, so to speak. Then again, who knows, maybe a deal will be done by then, in the next 3 weeks or so. Sometimes these things move quickly. More often than not, they tend to drag out. And that then begs the question, who are the potential suitors for De Beers? Or what are the options for the company? And we have to remember that this question hinges solely on where Anglo can get its biggest payday. But let's look at it from a diamond industry perspective. Firstly, some are asking whether Botswana would be a buyer of Anglo's stake in De Beers, bearing in mind it has 15% ownership already. This is highly unlikely. I don't believe the government has the budget for such an investment, not only to buy the company, but also to carry out such capital investments, such as the underground expansion of the Zhuaneng mine at a cost of $1 billion, for example. Besides which, I don't think it makes strategic sense for the government to go even deeper into a reliance on the diamond industry. It really wants to diversify its economy. They might be enticed to up their stake to, say, a 25% ownership. That has been offered to them before, but I expect Botswana to remain a minority stakeholder one way or another. Next, we must consider a public offering of De Beers. This might be the most transparent way to move forward, as it would keep De Beers in the public eye and under the watchful view of the industry, who might then also be investors in the company. It's not far-fetched to imagine a scenario in which a group of site holders, De Beers clients, rally together to buy a significant stake in De Beers through a public offering, enough to take a seat or two on the board of directors. That would be an interesting development indeed. The challenge here, though, is that diamond mining stocks have not performed well and have not given great returns in recent years. But again, it might be an avenue that Anglo will explore to extract the most value for De Beers and perhaps keep a smaller stake in the company. Then there are the potential buyers, and I don't see conglomerates such as Rio Tinto or Glencore coming in. Diamonds are not a good fit in their world of commodities trading. The long-winded Anglo experiment proved that. The Wall Street Journal ran a story that Anglo has been in talks with several luxury houses and Gulf sovereign wealth funds, and that does make more sense. And I think the story will develop in that direction. Personally, I'd like to see an IPO, but it may be in the best interest of the industry for a luxury house to do something interesting with this brand, because at the end of the day, the De Beers brand needs to be nurtured in a way for the sake of the industry. And we can talk about production and the different business units and its influence, etc. But that brand equity is just so magnificent. You know, a diamond is forever. And it lay dormant for so long that Anglo struggled to extract value from the De Beers brand suggests that the brand has been somewhat underutilized in recent years. That's the challenge that awaits any investor that comes in. So there you have it. This is the story that will dominate the industry headlines in the months to come, because we all love a good takeover story, but also because De Beers simply intrigues everyone, and because it has far-reaching ramifications for the industry. So watch this space. I'm Avi Kravitz. I'd love to hear your feedback and views on this story. So leave a comment, like my video, and subscribe to my channel. Appreciate your support. I'll see you guys next time.